Every individual or corporate organization actually seeks to attain the highest level of satisfaction from their investment decision and financing decision. And this assumption basically underlines every other four major assumptions of CAPM. CAPM simply means capital asset pricing model for those that have not known it, and basically it has two major objectives. The first objective of CAPM is the determination of the expected return on our investment that we are looking at, and the second one is actually about the whether or not to put the stock into our portfolio. The first assumption talks about the perfect capital markets. And can we really say capital market is actually perfect? So, but it talks about perfect capital market. And when we are talking about perfect capital market, we need to talk about no taxes and no transaction costs. That is one fundamental assumption of CAPM. And just like every other social science subject, humanity, we are actually unpredictable. And because of that, there are some underlying assumptions in social science. So talking about CAPM is not an exception. So no taxes. Of course, we know in reality there will be taxes, but basically for us to establish CAPM, we need to establish it on some basic assumption, which is a perfect market. So there's no taxes, no transaction costs, free entry and free exit. Investors can come in and exit at will. Also, they can buy and sell at any time. So, and there are many buyers, many sellers of stock and participants. Equally, the participants are utility maximizer, and utility maximizer simply means that everyone, whether corporate or individual, actually seeks to achieve the and attain the best and the highest level of satisfaction that they can derive for their investment and finance decision that they've made. So they are utility maximizer. And last but not the least, under this category is that information is free, is costless. We know this too is not true because information actually is very costly, but we need to have this at our fingertips when we are talking about CAPM. Then the second assumption, all those that I've mentioned are actually under perfect markets. A perfect market, an efficient market, is devoid of taxes, free exit, free entry, free information flow, and the like. The second one is the single period of transaction horizon. So basically, we are talking about every investor that comes in is looking at least 1 year horizon in his or her investment. Then we talk about the third one, which basically is telling us that every portfolio is actually diversified. Every portfolio is actually diversified. And let me give us an example because we know when we are talking about diversification. For example, everyone is on the plane, whether the first class, the business class, or economy class. We are all in one plane, and up we are lifted by the plane. You know what? That talks about the systematic risk. If anything happened to that plane, everybody will crash land. So that is the world of investment. It doesn't really matter the class of investment. Some people will buy penny stock, some people will go for industrial stock, they just major on some industry, while some people will buy highbrow stock. I hope we understand. But this is an assumption that every investor has the knowledge to diversify, and that every unsystematic risk is already diversified, remaining systematic risk. That is the risk that is common to every stock in the capital market. That was why I used that flight example. Having said that, the last but not the least that we are going to be mentioning as an assumption is that there is risk-free rates, lending, or borrowing. We know there is finance costs that is attached to every source of finance, whether debt financing or equity financing. So as we recap everything that we've discussed, it is important for you to like this video if you've enjoyed the value for the time from GGN's Associate channel. And for those that are just joining us, my name is Benga Olatunji FCA. I'm your friend. Okay, basically 4 assumptions: perfect market. Under perfect market, there is free exit, there is free entry, no taxes, information cost is actually free, and cost and the freedom of information flow is everywhere. There are many participants in the market, both to buy and to sell. Two is the horizon. At least we are looking at a year investment horizon, that every investor has the knowledge and has diversify his or her portfolio, and the risk free rates is applicable to cost of finance, whether we are buying or we are lending. From GG's Associate channel, Benga Olatunji FCA. Don't forget to like and subscribe. We are value to life. We are value to your businesses.